Hello, I'm David Lin, Director of Investment Research at Altair Advisors. Today, I'm going to share highlights of our quarterly commentary following a very good first half for most financial markets. Both stocks and bonds generated solid returns during the first 6 months of the year, led by gains in the high teens for U.S. stocks and mid-single digits for taxable and tax-exempt bonds. Even with the outsized return for large caps, the S&P 500 has kept to a modest pace over the past 18 months, with an average annual gain of 9%. Foreign stocks performed nicely as well, but did not benefit from having the U.S. tech stocks that disproportionately boosted domestic market performance. The strong first half came as the U.S. economic expansion passed the 10-year mark, exceeding the length of the tech-fueled run that dominated the 1990s. Speaking of the expansion, our commentary focuses at length on the U.S. economy and concludes that while it is slowing, it remains healthy. Recent declines in manufacturing and business spending are certainly areas of concern, yet most other key economic indicators are positive, and we currently do not see any major stresses that point to a near-term recession. We believe a still solid U.S. economy should continue to support stocks for the second half of the year. Our commentary also discusses the latest developments in the U.S. China trade war. The slowly expanding impact on trade volumes and other areas has heightened uncertainty and made the tariffs fight more of a wild card for markets than ever. Direct consequences on the economy thus far have been contained. However, an eventual trade agreement is needed to sustain the current market cycle and avoid broad damage to the world economy. We believe the strong incentives for both Presidents Trump and Xi to avoid a breakdown will result in a trade deal before next year's U.S. presidential election. Another important topic this quarter is the Federal Reserve signaling it will lower interest rates. We view the multiple rate cuts that Fed officials have projected as justified in the face of subdued inflation, slowing global growth, and a recently inverted yield curve. After 9 rate hikes over the past 3 years, the Fed's turnaround should be good news for investors. While rate cuts are no guarantee the economy or markets will strengthen, we see similarities to 1995 and 98 when the Fed shifted from raising rates to lowering them, followed by a rise in stocks. We think markets should benefit this time too, unless trade war negotiations collapse for an extended period. Overall, we remain optimistic about equity markets for at least the second half of 2019. Central banks have pledged easier financial conditions, and the U.S. economy continues to be a linchpin of the global economy. Please read our full market views in this quarter's commentary, now available on Altair's website. Thank you for watching.